In this video, we're going to talk about trading high impact news. Stay tuned. Hey traders, a very warm welcome to you. So, a question from a subscriber or a viewer. Thank you very much. Always appreciate your questions. Says, do you have any advice when trading high impact news? If you flip a coin 100 times and plot the results, you'll see all kinds of patterns, support, and resistance. So it makes me wonder how much of the market is random. At least you know with high impact news that something is driving the market. The hard part is knowing the news that will move the market. And he goes on to mention some more other stuff. So that's a really good question, and thanks for that. Let me just put that laptop down on my desk and try not to drop it. Okay, so that's a really great question, and I love questions like this. Is the market random? Someone's thinking outside the box a little bit and kind of thinking, should I adjust my strategy? I sort of understand what news happens, but is the market random when I toss a coin? Love it, love it, love it. So, you know what? I subscribe to what this gentleman or lady saying. I haven't got your username, apologies. Regarding the market being random, I think a lot of the time the market is random. And do you know why? Because I think that you've got some people think it's long, some people think it's short, some people are investing for the long term, some the short term, and you've got this two-way flow. And as it's pointed out there, you know, if you're plotting coin tosses, you do get kind of stuff like this, like imaginary, resistance lines there that are kind of meaningless, and you could say, well, that's resistance, but it's a random event. And so, you have to come to the conclusion that maybe a lot of the time the market is random. A lot of the time, you can't predict how one person's going to behave, another person's going to behave, one group of people are going to behave. Could the market go up today? Could it go down today? Is a chart pattern a good thing to be looking at? Probably not. I think a lot of the time that there is a lot of random activity in there, which is why as traders, we have to pick our spots very, very carefully. And why, if you watch any of my other videos, or if you're a subscriber, by the way, consider doing so if you haven't yet. Good stuff. You'll know that I like to be an advocate of picking and choosing my spots. I'm very much less frequently trading than I used to be, recognizing that the 80-20 rule comes into play, but just recognizing that, hey, I don't think I have an edge a lot of the time. I do think that the market is random, or if it's not random, I don't think I can predict, a lot of the time where it's going to go. And so why would I want to risk my trading capital during those times? I only want to risk my trading capital when I believe I've got a good chance of predicting where the market's going to go, or the risk reward is in my favor. And even if I'm not very good at predicting it, I think that it's got a fair chance of doing, 3 times my risk, and it's a feasible and good assumption of what I'm looking at. So in other words, so where am I getting to with this? The point is, yes, I agree with that. I think a lot of the times the market is random, which is where we come into the point of not overtrading. If you're overtrading, you're trading kind of random patterns, and you've got no edge, and you've got to know where your edge is and know when to get involved in the market. So it comes back to this initial point that the viewer was saying is, hey, what about trading high impact news? At least you can know what's going on. It needs that something's moving the market. I agree, and I think it's a great way of looking at it, because if you've seen me talk about things like you've got a reprice scenario, things like that, even if you're trading a stock, you could be trading a currency, you could be trading indice. A reprice scenario is a very, very good time to get involved in the market if you have your risk management, of course, and stuff. And we've talked about things like, buying the first pullback after, let's say, some really bullish news comes out on the economy or whatever it may be. The whole market lifts up, or the currency lifts up. You get that first pullback. You use your first pullback trading strategy in this, but you've got the added layer of edge of a reprice. In other words, some bullish news that has come out that is moving the market to the upside. And so, yes, great point, getting involved when you know, or when you've got a good idea that that's going to impact your trade positively, and adding a technical setup into that. Because have I got my other pen in my pocket? I do indeed. Red pen's good for this. I've talked about this before, guys, if you imagine that's your first pullback trade, you've got 2 first pullback trades, and if you isolate those, just look at those like that on a kind of 5-minute chart or whatever chart it may be, identical, but the position of them and what's caused them is where the edge lies with us. If that occurs in the middle of, I'm getting a bit crowded here with my stuff, bear with me while I just give us a bit of a wipe on the board. If that's in the middle of, let's say, a weekly range, there's your high or low, and it's not doing anything, it's kind of just, there's nothing extreme happening to that at all, no news, it's just in a monthly range or a weekly range, and you've got this first pullback trade. That's way different to this, let me draw it over here, which is, let's say your weekly high is here, you've exploded through the high, you've driven up, and it was caused by, you know, some kind of news, some kind of catalyst news. That's a much better proposition to take the trade than this trade, which is just, you know, chopping around back and forth. Yes, it's still a first pullback, etc. But adding that impact news, knowing that a lot of people are going to be now involved in this because it's changed, it's repriced the value of that asset, supposedly, and getting involved in it, that's a much better proposition, a much chance of success, in my opinion, than trading that. And some people might disagree and say, well, a chart pattern's a chart pattern, but I just know from my experience, when I've traded stuff that hasn't got that extra layer of edge on it, i.e. some sort of impact news or whatever, it's never as good. And it could be the same for a stock. You know, if a stock's had great news, you know, that's broken out, you're trading that first pullback. Another thing could be, hey, we've just talked about the expected response here, it could be kind of unexpected. So the news is really, really bullish, and you get kind of a double top that then comes down and trades through the area where the news came out. So that was the news there. It was really bullish. You pushed up and came down. Now, normally, you know, it's a pretty standard dull pattern. And of course, if we're in a weekly range, we just think it's going back to the mean. But the significance of that, if we've got a news catalyst there, of it breaking through that pre-news level, is very significant. Because if the news is positive, and of course, I missed that part out, it's positive, but yet we're still coming back and we're undoing all of that good work, and we're going lower to where we were before the news. So even though there should be a positive impact on it, we're now lower priced than we were before the positive impact. Again, that's a great trade. That's way better with that news addition to the trade than it is just trading this pattern on a raw basis. So in a roundabout way, yes, trading high impact news, I think, is a very good strategy to have. Now, you've obviously got to be careful of the volatility of that, but I think this sort of summary from this is, if there is a catalyst to the trade and you've got the setup, to me, you're adding layers of edge onto your trading strategy and your trading plan. That's not to say you can't kind of trade these on their own without the news, but being aware that, hey, as you go down and down and down, these can be, you know, good grade trades based on the volume. And again, participants coming in can be almost the same as news. If you've got a good volume on something and a good range on something, you know, there's a lot of people involved. And I think it's far easier to predict the potential movement of a lot of people than it is to predict the movement of a few people ticking back and forth. You know, it's a 5-minute chart or something that's going up and down. Does that continue? Does it pull back? You know, who knows? If this is a big range and big volume and the day after and a lot of people are involved in it and whatever, then it becomes a little bit more of a chance of success. And again, you know, it just comes down to trying to predict where you believe the price is going to go based on, you know, what it's done before, and, you know, the price and the patterns. And news just adds an extra layer in, because you know that people are going to be perceiving that in a certain way, and so they might react in a certain way. Anyway, I've probably made a massive answer to this. It didn't need a massive answer to this, but I think this is a really good question, because it's something that I'm very interested in, and something I'm spending a lot of time focusing on as well, of how news can improve trading performance, and how getting involved with trades that have been influenced by news, whether that's earnings plays, whether that's news on currencies or whatever, how that can actually influence the trades for the better. So good question. Thanks for that. Appreciate that. Hope that's helped with my answer. Thumbs up if you liked it. Otherwise, I shall see you in the next video, guys. Take care. Bye-bye.